This has been one of the craziest, most stressful markets that I've ever been a part of, and I'm sure a lot of you are probably feeling the same way as me. So today I'm going to be sharing some tips on how I'm staying profitable in this bear market. So far I've made $4,500 in profit this year and I have an 85% win rate. And the first tip that I have for you is to limit your position size, because the problem with the bear market is that it is extremely volatile, which means that the markets can turn around on you at any minute and leave you holding a bag. And the bigger that bag is, the more it's going to hurt. Now, back during the bull market, I was taking on $1,000 to $2,000 positions like it was nothing. I wasn't worried about the market because there was a lot more certainty and the markets just kept going up back then. But now, during this bear market, there's a lot of volatility, there's a lot of uncertainty on where we're going to go next. So I don't want to be left holding a big ass bag, because that means I'm going to have to make that back later on. So instead of using $1,000 or $2,000 like I was in the bull market, in a bear market, I'm only using about $300 to about $600 per trade. So I've cut my position sizes to about 1/3 of what I was using. And this kind of ties in with the second tip that I have for you, which is to not scale your account infinitely. Now, I know that compound growth is really sexy. I made about 30% last month, and if I continued to compound that 30% over the course of like a few years, I would be a billionaire. But unfortunately, it's unsustainable. I actually tried doing this back during the summer of 2020, where I had about $15,000 tied up in different options, and I was using whatever profits that I was making and putting that back into the options portfolio and taking on basically infinite leverage. Until I decided to take on a $12,000 trade and I lost all of that money, which means that I lost a lot of my portfolio and I blew up my account. It ended up taking me months in order to make that money back. So this is probably my biggest tip that I have for you, is to limit your position sizes and to not scale your account infinitely. And instead of, putting that money back into options, what I would probably suggest is to either save it as cash for a rainy day whenever stocks are dropping by a ton, or you can use it to dollar cost average like I'm doing. So whatever profits that I make through options trading, I usually end up throwing that into my long-term portfolio. Right now, my long-term portfolio is sitting at around $70,000. And the way that I built this over the last couple of years is taking whatever income that I make, either through options trading, through my YouTube, through Patreon, and putting that into shares of companies instead of buying options. And I feel a lot more comfortable putting my money into shares of companies. That way I can hold them for the next 5, 10, maybe even 20 years, instead of putting that into an options portfolio that I could blow up if I make the wrong trade. And the fourth tip that I have for you for trading options in a bear market is to cut your expiration dates. Now, before, I was setting my expiration date anywhere between 3 to 6 weeks out whenever I was using a credit spread or selling a call or selling a put option, because that's usually the best time frame for capitalizing on theta decay. But right now, there's too much uncertainty on where the markets are going to be over the next 3 to 6 weeks. Are we going to make a massive V-shaped recovery? Is SPY going to see $350? I don't know. But what I can predict is probably the next 1 to 2 weeks, because there's going to be a smaller trading range during those 1 to 2 weeks than there would be in a 3 to 6 week period. So instead of using these longer expiration dates, I've been cutting my expiration dates to 1 to only 2 weeks. And the great thing about this volatility is that you're going to get more credit accordingly. So this means that you're allowed to cut your expiration date shorter and get about the same amount of money that you were before whenever there was less volatility in the market. You get about a 4% or a 5% return on selling put options on a stock like Snapchat, whereas before you would probably need about a monthly expiration date in order to make this happen. But now you can do about a 2-week expiration date and get about the same amount of credit. Because of the higher volatility, your options are going to be worth more. So if you're selling credit spreads or if you're selling options, then you're going to get more credit accordingly. Whenever the markets were moving 1 to 2% per day, you needed to stretch your expiration date out longer in order to get more premium. But because of this higher volatility, again, you only need about 1 to 2 weeks instead. And finally, the last tip that I have for you is to either take your profits or cut your losses as soon as you can. Because again, this market can turn against you at any minute and wipe out all the profits that you made. I've seen this happen multiple times during this bear market where one day, I'm up by say 10 or 20%, but then the next day the markets decide to gap down to where my options are down by like 50 or 70%. So this is why it's important to be closing your position as quickly as you possibly can. And the way that I close my positions is I set a price where I think that the stock will reach by whatever given time. And then once it's reached that price, I'm out of the trade. I don't want to worry about it anymore. Because again, the markets could fade very quickly and take all of my profits away. And that's all the tips that I have for you. Hopefully you found this video useful. Thanks for making it all the way to the end. And thank you to all my patrons for their support. And as always, remember to stay positive, stay green. I'll catch you in the next one. Bye, guys.